So I think with cash flow management or forecasting and CFO type stuff, there's the risk mitigation of knowing like, okay, if we do X, like we'll have enough cash flow to survive, right? So that's kind of the downside protection element. What, in your experience, if you were recommending this to someone, what would be kind of the upside scenario that a CFO could bring to the table? Because I think a lot of people think about it like, oh, well, they're just crunching numbers or they're just reporting on the past. And right, like, how does someone get excited about, well, if they can forecast, that means this?
Yeah, well, I just think it gives you more arrows in your quiver from a sales perspective. It's like, hey, if you're great at articulating a vision or a message via sales and painting a vision for somebody, if you could go 2 or 3 steps deeper backed by the numbers, like it's only to your advantage as a whole. And so, man, that resource from not just like a above the line, below the line, behind closed doors aspect, I think that they could be a real advantage from a credibility standpoint. When you're building this underwriting template or model and you're sitting down with a potential investor that's coming into a property and you're painting the vision and you're going through market research and demographic and all of the above and all the things that you might cover at a surface level to make sense, but then like you see when someone really wants to dance and you can go pull out the underwriting template and the financials behind it and walk them through there. Like I think that it's the ultimate closer, so to speak. And oftentimes you might not need that, but man, it's to your advantage when you do.